Hey there, everybody. Thomas Wood with Basecamp Trading. It is Tuesday, October 4th, and we're going to take a look at gold. This massive breakout we had and this giant breakdown we had today that is working out perfectly just like we wanted to see it do. And the reason we were bearish this market is because we broke out of the pennant yesterday. And if you watched the members video last night from Basecamp Trading, you know we said it was a short if it broke through yesterday's low at 13.11. We said if it goes below 13.11, we're bearish with a target down at 12.60. Well, obviously it broke through 13.11 and it's all the way heading down towards 12.60. We've gone down to a low so far today of 75. So you have another 15 points to go, basically. Now, that being said, you look at this trade and you go, well, how could I have gotten into this? Because I don't want to sell at 12 or 13.10. I'm going to put my stop all the way up $1,000 a contract worth of risk. So how do we time our entry into this trade? Well, that's where using something like cycle candles and what we call drill down analysis really comes into play. Just like yesterday, we talked about the bearish engulfing with the bearish cycle. Well, you had the same pattern today, right at 6 a.m. this morning. You had a bearish engulfing on your 240-minute price chart with a bearish cycle. Cycle candle indicator said, hey, look, bearish engulfing right there for the short. And obviously that would have worked out really well. But the point about this, the reason this is good is because now you're getting in at 13.11 just about, and your stop's up at 13.14 and a half, 13.15. So now you have a $350 to $400 contract risk, and you've taken your risk from over $1,000 a contract and minimized it. You've cut it in half. So that's how you drill down and time your entry. So just make sure it's okay to trade these bigger setups, and you can take advantage of these bigger setups. Just like today in the trading room, we took advantage of the gold short. Right at 8 a.m., we were saying, hey, time to sell gold off of a 120-minute bear flag with a support break with the bearish engulfing on the 240. And we said it was a longer-term trade for a swing trade because it was breaking out of the daily pennant. But make sure you drill down for your entry so you minimize your risk and maximize your reward-risk ratio. Because there's two things we can do to maximize our reward-risk ratio. We can either minimize the amount of average risk we have on each trade, or we can increase our average gain. Well, we cannot control how far our market's going to go, but we can control how much we allow it to go against us and how much risk we take on. So we can control that, minimize our risk, and take advantage of these bigger moves. So that's all I have for you for today. I will see you in the trading room bright and early tomorrow morning. And until next time, happy trading.